welcome to the CNBC TV 18 special. I'm Shireen Bhan and we're in conversation with Jamie Dimon. So Dimon, appreciate you joining us here on CNBC TV 18. Let me start by asking you about the view on India. You organized a meeting for the Prime Minister in New York where he had an outreach with CEOs. What's your own sense now that you are here in India about the reform momentum, about what's happening on the ground?
First of all, it's a pleasure to be here and it's a pleasure to be back in India. And so the Prime Minister, your Prime Minister came to New York. He met with both financial and non-financial. And, you know, I think there are a lot of things to do, but I think he's making a tremendous amount of progress. And he talks about it frequently, about tax certainty, infrastructure, labor, and land reform. I think, and India's growing. This will be 2 years in a row at 7%, which is the fastest of almost most of the major nations on this planet. So something is working, and he wants to get more foreign direct investment, and so outreach is a very good thing.
But is the outreach actually going to translate into FDI, and specifically in sectors like manufacturing, which is the big effort at this point in time? What was the sense that you got?
You know, I think it will. I mean, listen, all countries have their issues, and but I think, if I remember correctly, FDI is already up 50% in the last year. You know, I travel around the whole world, and a lot of people want to invest here, and some people want to have a little more certainty. Sometimes around, you know, you've seen a lot of tax uncertainty, regulatory uncertainty, things like that. So,
is tax still the #1 concern when people talk about investing in India?
You know, it's different for every business. So if you get 10 business people, you're going to hear 10 different concerns. But the fact is, India's been growing well. People want to invest here. Around the table, by the way, were private equity, venture capital, all different types of, you know, a big insurance company, and they all have big operations here, and they all have, you know, plans to expand over time, not to shrink. They just want to do it wisely and thoughtfully.
So given that you are optimistic about growth in India and about the reform process that this government is embarked on, what does it mean now for JP Morgan's plans for India, and how critical is India going to be as part of your Asia strategy?
Yeah. So, you know, every country is different, and so we don't look at Asia as one place. We look at it as a lot of different countries. We've been here since 1945. You know, we pride ourselves in being steady, strong, forthright. You know, as India grows, and remember, what we do mostly is bank big multinationals coming into India. We bank Indian companies here. We bank Indian companies going overseas, and we do the full set of products: ECM, you know, equity, debt, M&A, you know, cash management, foreign exchange, etc. You know, if you ask me, what we really keep our eye on, and I think it's very important for your viewers to do more of this, is what's it going to be in 10 or 20 years? I mean, India's going to be a lot bigger. It's going to house, you know, a lot more billion-dollar companies. Those companies can be far more international. That's our clientele. And so, you know, obviously in our business, you got to kind of, it's not like selling cereal. It doesn't grow at 1% or 3% a year. You know, our revenue go up or down 30, 40% in a day, a month, or a year. But we're keeping an eye on that. We have $12 billion of capital, you know, loans and capital at risk here. That number will probably double in 7 years. Or probably double in 7 to 10 years after that. And so we're going to grow as the economy grows. And
of course, retail is of no interest to you. Retail banking continues to be of no interest to you because it's already a pretty competitive landscape here.
You can't go, you know, if I opened 100 branches in Mumbai today, no one would know who we are. We don't have the right back office. We don't have the right technology. There'd be no economies of scale. There'd be no reason for you to move your bank account from wherever you are to us. It would be a terrible proposition. We couldn't possibly win. We'd be losing money for a long period of time. You know, what India should look at is what can we do to help India, and that's to help develop your companies. You know, I would love to be in retail, by the way. I mean, but the only way that would ever really happen is probably by acquisition.
And is that something that you could perhaps explore in the future?
Probably not in my tenure. I mean, we have too much to do with a lot of regulatory issues, so probably not in my tenure.
Okay. I'll come back to India in just a bit, but you've just come in from Hong Kong, so let me ask you about China. And you've said that, you know, we need to stop freaking out about China. You don't believe that things are as bad as they look at this point in time? The fact that we've actually seen a 5th rate cut being announced by the central bank in China, the 5th in the last 11 months, doesn't suggest that things are much worse than we actually think?
You've had a couple of rate cuts here, and things are doing quite fine. So, you know, look, governments have to react to the situation they have in their own economy. Again, I look at China, you got to look at the bigger picture. It's had 20 years of unbelievable growth that no one's ever seen growth that consistent. It hit a bump in the road. It's still going to grow at 5 or 6%. Some say 7.
Is it a bump on the road?
It's just a bump in the road. And that at 5 or 6% growth in China is $600 billion of global GDP.
Yeah, the size of the economy.
Which is bigger than most countries on the planet. Okay, and they've done a very good job managing through. And you know, as they go into market reform and SOE reform, they're going to have a little more volatility. And that's natural. Every country on the planet has a little bit of that. And so, I think today what's happened is everyone has become a risk expert. Everyone sees shadows behind every single rock. They're trying to predict the next bubble. China will house 25%, the likely outcome that they will house 25% of the global Fortune 2000 in 20 or 25 years. That's the likely outcome. That is what people should be thinking about. They are going to do quite well, and they're going to have bumps in the road. And, the trick, and for your investors and companies, is to kind of see through that and make sure you can manage the bumps in the road as opposed to panic and run in and run out. Now, if you're a stock investor, you might look at that very differently, but businesses don't have the luxury of opening and closing. They've got to think about serving their client over an extended period of time.
So China would not be the #1 risk at this point in time, as far as you're concerned, for global growth, global economies?
I don't know if China's the #1 risk. I mean, geopolitically, there are a lot of things going on in the world. I'm not sure those are going to derail the American economy or the Chinese economy. I think the #1 risk, honestly, is policy. Getting policy right. Having policy conducive to growth. That's practical, that's sensible, that grows countries. A lot of policy I see has this ideology around it. What it really does is slow down growth. If you have growth, you can pay for your infrastructure, you can pay for welfare programs, you can pay for schools, you can do all those things. If you don't, it's much harder. It's a much harder political environment. So I think the biggest obstacle to growth is that people don't do things that are actually good and conducive to growth. And every country is different. In the United States, we could do a better job in infrastructure, immigration, fiscal reform, tax reform, and those things. And different countries are different. But I urge policymakers to be very thoughtful about what actually works. And collaboration works better than finger pointing. Analysis works better than ideology.
Since you believe that China at this point in time is seeing a bump, what's the outlook then as far as 2016 is concerned? Because we're virtually at the end of 2015. How has 2015 panned out for you? I'm not asking you about the last quarter because I know you don't obsess about quarterly numbers. But do you believe that 2015 has panned out according to your...
You wouldn't know it from reading the press that JP Morgan, I've been public about this, will probably have a record year this year.
Yeah.
And my guess is we very well have a record year next year. And again, profits are not, if you measure a company just by profits, you're making a mistake. The reason I talk about quarterly profits is because profits you earn this quarter, and all businesses have this, are based on decisions you've made in the last 5 or 10 years. And in certain businesses, it could be decisions you made over 20 or 30 years. So I think it's a mistake to focus just on quarterly profits. The world, the likely outcome is the world will grow next year, 3% or so, and, it could be, I wish it were faster. It's not fast enough to give governments enough revenues to invest in the things they want to do. But 3% is 3%. The global GDP is quite large, and 3% is quite large, and I'm hoping it's better than that. I think it could be, by the way. I think that
2016 likely to be better than 2015?
I think it could be, yes.